Welcome to Bears in Exile. Today is Monday, December, November 26th. I guess I just want Christmas to get here. And and away we go, looking at the Dow SPX 16AU, UPFXE, GLD, SLV, and all the rest. So, market down 42 points. Today was Monday, which is what we're looking for. Not believing all of last week's goodness and expecting for the true colors to come out come Monday, roundabout. And so it was a red day, and we did lose the 200-day moving average on the Dow. It ended with a hanging man candle. And, there's some interesting things to look at here. For one, long-term moving average bar. That is exactly where it stopped. We know that the long-term moving average bar is resistance and it is support, depending on which direction you're coming from. And even though it's pretty banged up, it was able to stop it thus far. Losing the 200-day, not a good sign. It pierced the halfway mark of the big green candle from Friday. Also not the most encouraging sign. So a couple of things against it, right? We have the descending channel, where he said that we were going to be looking for the bottom line to function as resistance. We're not there yet. And we said that we were looking for a secondary reset. Figured that it would be coming soon. And so far, so good. So we have the fast stochastic ticking down today. We noted that it was really high, and unless it got stuck high, it should be coming down to some extent, maybe all the way to the bottom. We don't know that far yet. Said we did not like the angle of ascent here. So, so far so good. But there are a few conflicting signals tonight. So, we have nothing in the topping area. We have nothing in the bottoming area in regards to the heat map. It is totally 100% neutral, just like on Friday. We still have 14-day RSI moving average in ascent. It has plenty of room to move. We still have the slow stochastic moving up, the CCI moving up, the MACD histogram moving up, and the MACD moving up. By and large, more positive than negative. Absolutely. And a secondary reset, only a short-term temporary move to reset. So I would still be looking for that. Had noted in the daily running thread that it could be a day or 2 days before the slow stochastic turns. And once both of them have turned, then we know the writing is on the wall for a very short-term secondary reset. So I'll be looking for tomorrow, maybe Wednesday, for that to turn. Unless this is going to be fake and this and the fast stochastic turns back up, it could do it. The RSI itself turned down today, but anyways, kind of a push-pull in the daily time frame. But we do have bearish signals, and we do have more time in the very short term for the secondary reset to truly get underway. So push-pull. Now on to the nitty-gritty. 60-minute time frame. All right. So there's a couple of things to look at right here. Very interesting. For one, let's see where it's at. We've cleared all of this area. We've come to this area and pretty much stopped this little top right here. Line's very nice with the open from today, very close. With the 14-day RSI moving average holding high, with a dip already on the stochastics, and they're headed all the way, well, maybe all the way back to the top. In which case, there is some more room for upside movement, very short term, and that would take a day roundabout to finish off its move. I mean, it took the majority of today to get down here. It's already halfway back to the up. So, yeah, a day roundabout, and then it has to turn back down. So Tuesday, Wednesday, it makes a lot of sense. Room to move upside on the CCI, the RSI, and look at that. The MACD itself is fighting, and the MACD histogram has negative divergence. So having another blip up, MACD histogram, before it runs out of space and has to go negative for real, makes a lot of sense. Day, 2 days, and there should be some sort of corrective movement, assuming that the news cooperates. So, daily time frame iffy, 60-minute time frame showing that there should be a little more time, and yeah, if we got some more to the upside, maybe we could hit the descending trend line right here, just above, where would that be? Be just shy of 13,100, maybe about 1350, something in that area, vicinity. Maybe it pierces, and in which case it would get to 13,100 or slightly above. But anyways, be nice to see it halted there, close below it, but we shall see. And moving on to SPX. Yeah. Now this one I think is more interesting because we're much closer to the descending trend line. And we can see here, yep, hanging man, same as the Dow. Have a little bit of a topping area unlike the Dow. And very interestingly enough, the fast stochastic has not ticked down unlike the Dow. So this one actually just seems a little more developed and less room to move. But that's just my... Oh, actually, you know what? I'm wrong. Huh. Guess I have to scale this properly. There was a tick down on the fast stochastic. So anyways, not very different from the Dow. Actually, it's extremely similar, just less room to move to the upside, and a tiny blip in the heat map. So it's pretty minor. Pretty minor. But going up to the descending trend line would take us to about 1412 roundabout, and then appear somewhere, 1415, something of that nature. Notice too, big red candle. We are right at maybe just a tad below the halfway point, which is forcing it back. Interesting that the long-term moving average bar has already been beaten and then sucked back into. But anyways, it's very, very minor. I would say this is a tiny bit worse than the Dow, but that's a little bit of guessing, to be perfectly honest. 60-minute time frame, any different than the Dow? Well, here's something that... Actually, I should go back to the Dow for that. All of this is similar to the Dow. It's better defined on the Dow's chart, actually. I think. Maybe I'm wrong. Maybe it's better defined on SPX's chart. Sorry for swinging around here. Well, nah, I don't like it. I was going to say that there was some evidence of inverse head and shoulders, but it's just not pretty enough. Because I thought that this shoulder was a little bit lower than this over here, but really it's just one big line. So, too iffy. Too iffy. And going on to the VIX. I just don't want to see something that isn't really there. So, now here's something that's very interesting that does suggest that we are going to have down movement over the course of the week. Here we have the VIX. The VIX ended today with a very small inverse hammer, which actually is not helpful for us in the position that it's in. But we got an uptick today on the VIX, and it goes up here to 1640, which would be a pretty good 90-cent move to the upside on the VIX, which would be bad for the overall market. And this, just like the Dow and SPX, appears to be a secondary reset. This one has much better information for us to look at simply because we have a bottoming area in the heat map. We have the CCI rising. We have the stochastics both rising. We have the MACD histogram rising, and we're losing angle on the MACD itself. We do have the RSI still pointing down, the 14-day RSI moving average still pointing down, but everything else looks to be setting up for a secondary reset to the upside, and we have an uptick. So this is a really good sign. We have 4 days to complete this, which takes us through Friday, that there will be a move to the upside in the VIX. And beyond that, this is really something, because we have this established trend line, which we know is good. If we are going to make a pivot low here, then these are all ascending, and that's a good sign. But 14-day, after that secondary reset is finished, should complete its move to the downside in the VIX. Probably take a week, maybe a little bit longer for this to, maybe up to 2 weeks, for this to finish out its move to the downside. And assuming it gets all the way to the bottom, we'll have already had the secondaries move up and then move down with it. So at that point, probably have a retest of this trend line. I really like that. It provides an ability to make some money on the upside or the downside in the market, and then potential to make money as the market goes up and the VIX goes back down to this trend line. So a double winner potentially if that works out, and I just like it when things move the way we want them to move. Now 60-minute VIX. Now this one we want to see, well, do a few things. If the market is actually going to go up or slightly up or sideways through Tuesday, Wednesday, then the VIX should go down during that time period. And while we have an uptick, we do have 4 days for it to complete. It does not have to do it all in one day, which happens quite a bit, but doesn't necessarily have to be the way. So here we see a very, very, very minor bottoming area in the VIX 60-minute time frame. We have the stochastics descending, we have the CCI descending, the RSI descending, the histogram descending, and the MACD losing some steam. 14-day RSI moving average is still moving up, so that should put some damper on its downward movement. We don't want it to fall through that trend line. Matter of fact, we probably don't even want it to bust out this low, although that would be very nice for the market in the short term. But regardless, it's this trend line right here, and we have this room right here on all the secondaries to complete a secondary reset before they can go up, join the 14-day to finish out its move to the upside. So, does this line up with what looks to be correct on the Dow and SPX? Yes, it does. Yes, it does. It correlates perfectly, actually. So far, the thesis seems to be sound. Moving on to TNA, small caps. Very interesting. Very interesting. The Dow was red, SPX was red, and TNA was green. How does that make any sense? And this one should lead, so if this one is supposed to lead, which it normally does, and it was green today, what does that say for the Dow and SPX tomorrow? It says that they probably will have a upside bias of some sort, but look at this as well. We're in the trend line, or the channel, the descending channel, which we know is a good sign if we were able to get back inside of it, which we did, but we're coming up on the long-term moving average bar and the 200-day moving average, both of which should offer resistance at this level and just above, going up to 56. Beyond that, just to get a little perspective, I'm going to zoom out some. We can see the fast stochastic turning. It is not pointed down yet, it's going sideways high, but that does tell us that the slow should reach up to meet it, and it should not stay there long. It should not stay there long. It can be rounded top on the stochastics, just like back here in these areas. But atypically, you get up there and you get back down. You get up there, you get back down, you get up there, you get back down, etc., etc., etc. And so the question becomes, is this a get up here and get back down, or is this going to be rounded? We don't know. The 14-day RSI moving average is pointing up. It is low at the moment. Low at the moment. And we can see how darn high that fast stochastic is. CCI reaching up, getting pretty high. RSI ticking down, up on the MACD, up on the MACD histogram. Just a matter of a secondary reset completing itself. Look at the angle of this ascent. Is this a good thing? And UUP, the dollar. Massively important, right? Yeah. Massively important. Driving the whole market. And on Friday, we talked about this trend line right here. Right here. Is this right? Did this move? I guess I just have so many, there's so many lines here that it's confusing me. Stopped right on the line Friday that we were talking about, that we've hit so many times over and over and over and over and over. And today, inside bar of the big red Friday bar. Notice it did not meet or challenge that line. Very important. Bottoming area in the heat map. And beyond that, we're looking for a secondary reset to complete. Fast stochastic, slow stochastic, already both very low. Fast stochastic going sideways low. CCI very low, ticking up. RSI pretty darn low. Actually, it can go a little bit further, but losing some momentum. Down on the MACD, down on the MACD histogram. So, can this break that support line? That was the question Friday, and the question is still valid today. If we cannot, that is bad for the overall market. And we will have ascending lows. Beyond that, 14-day RSI moving average ticking down. This is the second day of its downtick, and it is rather high. But we can see those stochastics. We're looking for a secondary reset here. It seems to be in pretty good setup here. We just need a little bit more. We need both of these actually pointing up. We need the MACD histogram to get a tick up, and then we should have a short-term rise in the dollar, which would be bad for the overall market. Could be another day, could be another 2 days, maybe it could be even 3 days. But it should not be too far away. If this was a deep, deep, deep red in the heat map, that would be a better indication, but we do not have that either. It is possible that it will break this support, go down to the major price consensus level for November, or even go down here to this low, or fill this gap, and then it will be so thoroughly overextended that it will have to turn. So that's why I'm not jumping into anything yet. I want to see a little bit more. And CompQ, the NASDAQ. Just like TNA, it was green today. And we had two possible trend lines going way back here into June and July. Just playing with two different touches of all of the little bottoms and everything here. And the top one is the one that we've been looking at for a while now, that has served really well, where it's hit and touched over here and we know that it was good until it was gapped through. Then we had the low one. We still don't know if this one is anything really. It's pretty much where it stopped today. We don't know if it means too much yet. But we're at the 200-day moving average. We're at the long-term moving average bar. There should be resistance at this point. We are losing the momentum in the fast stochastic, just like all the other charts. RSI pointing down, everything else pointing up. But so there's nothing really to see here except that it is so similar and we're so close right into the teeth of resistance. This one has gone farther than the Dow and SPX, and it should lead similar to TNA, but not to the same extent. So, does it have problems at this point? How long, if it doesn't break this, can it stay here before it has to decline once again? That is the question. And Apple. Very nice day on Apple. Very nice day on Apple. Up just over 3%, $18. And back into the long-term moving average bar, very close to the 200-day moving average. Up here at 600, we have said that we needed a retest of the 200-day moving average. It's exactly what it's trying to do at this point. We do not know if it's going to break it or not. This one still looks better than most of the other charts. We do not have the fast stochastic turning down. We don't have it going sideways. It's still pointing up, just like the slow, just like the CCI, just like the RSI. This is also different than the other charts. Up on the MACD histogram, up on the MACD, up on the 14-day RSI moving average. This one in the daily looks good still, even though it should have some problems in this area. But overall, not bad. And GE, trying to get a better read on the Dow, and unlike the Dow, this was green today, making a new recent high, which is bullish. Very nice bounce off the 200-day moving average, coming into an almost non-existent long-term moving average bar. Should not be as much resistance. And this being green today and the Dow being red, does that give an upside bias to the Dow tomorrow? Slightly positive extra to it? Yes. Nothing in the heat map. Everything pointing up with the exception of the 14-day RSI moving average. Looks a lot like GE. I'm sorry, it looks a lot like, of course it looks a lot like GE. Looks a lot like Apple with the exception of the regular RSI ticking down. But yes, overall, should be a little feather in the cap for the Dow tomorrow. And we do want the Dow to go up a little bit tomorrow. That would be good. That would keep the slow stochastic on the Dow going up, which is exactly what we want at this moment. Going on to GLD, gold. After the nice movement up on Friday, taking a little rest, getting back inside the upper Bollinger Band, good sign. Red spinning top, not a big deal. Small blip in the heat map, not a big deal. CCI pointing up, stochastics holding high, 14-day RSI moving average ticking up, RSI ticking down slightly, uptick on the MACD histogram, uptick on the MACD. You know, this one is, until there's more information on this one is difficult. There's not a good sign. We don't have a movement down on any of the stochastics. So this one has a little more development, it would appear, before it is ready for a decline. Certainly there's a lot of people that think that gold is good at the moment. I'm not saying that it's not, but its pattern here is quite good. Low, high, higher low, higher high, and at some point can assume a higher low somewhere in this vicinity. But we do not have enough information at this time to make that correlation. I'd actually like it to go a little bit higher. Same thing with SLV. I was saying that I was hoping to see it at 34, and it didn't do bad today. Didn't make a new recent high, I don't believe. Oh, it did, by a penny. Okay, well, it made a new recent high by a penny today, which is a good sign. And right at the upper Bollinger Band, breaking the lower price consensus level, the upper price consensus level for the month of November, which is actually a really good sign. Deeper topping area in the heat map, down tick on the CCI, holding high on the stochastics, up on the 14-day RSI moving average, going sideways high on the RSI, up on the MACD histogram, up on the MACD. This one is extended, and it'll be just right. Not too cold, not too hot, but just right. And it gets to this area or just a little bit higher, and I hope that it does it in a wildly spectacular fashion, but I guess we'll have to wait and see. Not enough information or position for this to be acted upon at the moment, but it won't be long. I don't think so. And JP Morgan, most important bank. Man, how about that? Beautiful hanging man, and it's not at the top of a range. What a waste. What a waste, but it is what it is. down on the fast stochastic, down on the CCI, sideways on the RSI, up on the slow stochastic, down on the 14-day RSI moving average, fighting with the trigger line on the MACD. MACD histogram barely a tick up. Not impressive, but not a really good sign either. So this one just not a good indication one way or the other. And XLF. Oh, okay. Yeah, we didn't get a downtick on JP Morgan. It would have been a one-dayer anyway, so it wouldn't matter. XLF, another hanging man. It is not a downtick today, stopping short of the lower price consensus level. Barely a blip in the heat map. Down on the CCI, down on the fast stochastic, down on the RSI, and going up on the MACD histogram. Slow stochastic, 14-day RSI moving average going sideways. This one is iffy as well. Doesn't tell me very much of anything. And I think that that's going to be about it. So call for Monday. Wait and see what happens. See if it reveals its true colors. I think that that was a good call. And I think that it is going to be another day or two, maybe even 3, before this secondary reset is ready. So I would have loved to have seen everything turned down today, but admittedly, that was hoping for a little bit too much. So I just need to be happy with the signs that have come through today. So, as always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.